Okay, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. I want to start by saying this. If you are not following me on Instagram, you are fucking up your life. No, I'm kidding. But seriously, follow me on Instagram because there is content on there. Every single day I post, usually reels, also stories, but I'm posting about the markets, posting what I'm following and what I think is most important. You're not going to see a whole lot of BS on there. Every once in a while, you know, I got to create kind of the mindless BS content or whatever just to advertise the channel. I do the same here on YouTube. But follow me on Instagram because if you're interested in my trades, if you're interested, is that a piece of my wall? Here, let me move this up. Yep, you can see a piece of my wall. I don't have the entire wall hit with the green screen. All right, that should be better. Okay. Follow me on Instagram because I post all of my trades. I post everything that I'm watching in the markets. And if you're interested in what I'm doing, Instagram is a really good place to follow me. I mean, YouTube as well. So if you're subscribed to me on YouTube, thank you for all the new subscribers because we've gotten like over 100 in the last few weeks. I really appreciate you joining the channel here. And the reason I want you to follow me on Instagram is because I think that some of the things I'm paying attention to are most important, especially if you're trying to trade the markets. A lot of this political stuff, the day-to-day political banter, you know, it could be anything. It could be about Joe Biden. It could be Brian Greiner. I really don't care. It's mindless. It's not going to help me make money. That's why I'm not talking about it. That's why I'm not focusing on it, because all of that political BS, you know, Mar-a-Lago, special masters, I mean, it's all just BS. And Trump's not going to jail. Bet. Okay, so now that we got that out of the way, obviously we've got to talk about the markets. I do want to take some time to talk about the volatility of options and how it is that I'm trading them, how to trade them correctly, just from sort of a philosophical or fundamental point of view, because a lot of people are very, they have a lot of questions, but they're also, I think, a little bit, there's a misunderstanding about the options, right? Because some people will hold the options, and options are designed to go to zero. So you really shouldn't be holding them that long. And a lot of people don't understand, like, you have to take advantage of the volatility. And I want to explain that in this video. Before we get to all that, though, let's just talk about a few things. Obviously, it's a big week. This is a huge week, probably the biggest week in September. Or, I'm sorry, in December. And by the way, it's December 11th, 2023. I'm trying to remember to say the dates on these videos. We had the U.S. producer prices, right, where the inflation on that metric is over 7%. We're at 7.4% year over year. So inflation is out of control, and it's probably going to get worse. You know, the main fear here, I think, is stagflation. And the definition of stagflation is when prices remain high, but we go into a recession. So the Fed wants us to be in a recessionary state. I don't know if they full-blown have said, oh, yeah, we want recession, but they want some sort of recessionary state. They want a slowdown in the economy because they believe it'll bring prices down. And this did happen, I believe, in the 60s with Volcker. Paul Volcker from he used to be the Fed chairman back in the 60s. He raised the interest rates, and he was very unpopular. I think it was Johnson who actually canned his ass because he was telling him to raise rates, and then Johnson actually lost the election. But Volcker was one of the only Fed chairmen that was, like, you know, raising the rates and trying to bring the inflation down in the 70s. I think it was the 70s. The point is that if they're right, that inflation will come down due to the interest rate hikes and trying to restrict the monetary supply, pull the economy back a little bit, if they're right about that, then they're making good decisions. And we have to remember, I mean, I think we're at, what, 3.75% now with the interest rate. That's not a high interest rate. We are not even in a high interest rate environment. And I really want I want people to understand this. We're being told that these interest rates are higher. They're getting higher. These rate hikes are high. This is not a high interest rate environment whatsoever. And I think that's why we're seeing, you know, some of the expansion in the economy still, because all the economic numbers this month came out very well. They came out better than expectations, which is not good because it means the Fed is probably going to go, in my opinion, they could go 75 basis points. I would like them to go a full percentage point. I'd like them to go 100 basis points or 1 full percentage point because we would get up to 4.75, which is near what they say, 5% is their terminal rate target. So that would be 25 basis points away if they raised by 100 basis points in December. And then they could do 25 basis points in January and we'd be at 5%. I don't know if they're going to do it like that, but that seems to me it wouldn't be an illogical way to think about it. And I don't think it would be illogical for the Fed to be considering something like that. But I don't think 5% is going to be the terminal rate. I think we're going much higher than that. I think we're going to 7% like Jim Bullard said. It's just a hunch I have. I don't think the 5% over the next few months is going to slow down the economy enough. I think we're going to have to go to 6, probably 7. And these are esoteric numbers too. I'm not going to get into all that too. But if we went to the 6%, right, obviously you guys know what that represents. And then if we went to 7, well, then we could say maybe it's God's will, right? If they take us all the way to 7% interest rate hikes. I mean, I'm joking around a little bit here, but you have to pay attention to the esoteric numbers, the esoteric meaning behind a lot of this financial techno-babble, right? And that's basically what it is. I don't care if it's Jerome Powell or some hedge fund manager or a YouTuber. It's techno-babble. It's like econ-babble. It's financial econ techno-babble. A lot of it is just, a lot of it's theory. Like even from the Fed, a lot of this stuff, they have admitted recently that they don't understand inflation. They don't really know anything about it. It was... who was the Fed guy right before the crash in 2008? What was his name? I just watched a documentary about him. Let me see if I can look up his name real quick. Fed chair in 2000. What was his name? I can't remember his name off the... Alan Greenspan. Alan Greenspan, this was after he was the Fed chairman. And I watched a documentary about this recently. Alan Greenspan said that... we really don't know anything because he was in control right before the crash in 2008. And I think his term was up just a year, like maybe 2007. And then that's when Ben Bernanke came in. And a year later, the entire, financial system almost collapsed. And Alan Greenspan didn't see it coming. He admits he had no idea this was going to happen. So, they don't really know. This is all theory and it's not a science. This is the other really, and this is why I'm interested in it because I was given no financial education as a kid. This is a little bit more of a vlog style video, story time style video maybe, but I hope you guys enjoy it because I want you guys to be able to relate. I want to be able to relate to you. And so let me tell this story. So I had zero financial education as a child, literally zero. We lived a pretty decent life because my dad had a good job. And my parents were educated. They were very educated. They both had master's degrees. My father had a PhD. But I had literally zero financial education as a child. In fact, I remember we were kind of hard up on money because we were living well beyond our means, and that was partly my mother's fault and my dad having kids, trying to provide a good life for us. So we were living beyond our means. But I remember my grandmother, when she passed away, left us a few $1,000s in stocks, McDonald's and Coke and stuff like that. And my parents sold it. They sold off the stocks that, were left to us because we were really hard up for money. We were just living beyond our means. You own a house, right? It's a big money pit. And so we had a really big house, big yard. There was a lot of expenses. Long story short, zero financial education, even in school, in high school. Not even a checkbook class, not one. I was given zero financial education and then I was thrown out into the world. And then I was pressured to go to college, which I went to community college, didn't take out that much debt, but I was pressured to go to college, go to 4-year school, with zero financial education. And part of me almost like resents the fact that I was given no financial education because I spent my whole 20s completely oblivious to the world of finance, to the concept of finance. I mean, it's more of a thing in certain cultures, right? You read a lot about these people, Jamie Dimon or Rockefeller or J.P. Morgan, any of these guys, Alan Greenspan, I watched a documentary about what's that trader's name? There's so many of them. Ray Dalio. But in certain cultures with certain people, all right, without getting too political here, the financial stuff, it's kind of engraved in them as children. So they grow up with it. They understand it. And plus there's certain groups of people where they're just superior, right? They're superior intelligence, superior culture, superior history, whatever it is. But some people are brought up with this financial education. So I was completely oblivious to finances. And then I came into a lot of money when I was sort of doing well on YouTube a few years ago as a vegan. Blew all that money just trying to live in LA. Never once occurred to me to invest in the stock market. I literally had like $3,000 checks from Google, $4,000 checks, $5,000 checks. One month I made 16 grand just streaming, just talking shit on YouTube. And it never once occurred to me to get into the markets, to trade, because I was oblivious to it. They don't teach us these things. And I think they deliberately hide this kind of knowledge from the masses, which is okay because the truth does come out, right? The light will shine on the darkness every time. When COVID came around, it was literally a miracle in my life because whatever it was, I was following COVID. I was following all the conspiracy theories with COVID, but I kept seeing the headlines about the markets, right? The markets crashing, and it was one of the fastest flash crashes. I think it lasted like a month. So I kept hearing about the market making these new lows, and I guess I was slightly aware of the concept that if you buy something low and sell it higher, you're going to make money. So that clicked, and so I almost thank God for that experience, for COVID, for the lockdowns, for all of it, because without it, at 30 years old, I don't know if I would have ever discovered the markets. And I know that sounds naive. It sounds... because I'm uneducated. I went to community college, but I don't have like a 4-year degree, given absolutely no financial education as a child, not even a checkbooking class. Okay. And we were always in the hole. So that was my experience growing up. And I'm Greek. So a lot of my, like a lot of Greeks, they'll own restaurants. A lot of them are business owners. Some of them own like construction companies, or maybe they're involved in the hotel business, hospitality, and some of them make really, really, really good money. But there's not a lot of Greeks that are involved in finance. Like when my grandfather came over from Cephalonia, his family were literally onion merchants. Okay, they sold onions in an island in Greece. So when my grandfather came over in, I think it was like the 1920s or 30s, he just opened up a restaurant. And a lot of Greeks, that's what they do. Not a lot of Greeks that I know are involved in finances or banking or stock trading. Most of them are not. There's literally 2 people at my church that I know personally that are involved, actively involved in trading and investing. So, anyways, finding the markets, it took me a while. It's been like 3 years now, I guess. Let's see, 2020, 1, 2, 3. It's been like about 3 years. And I was profitable after about my first year, blew all of that when the market started turning around because I just kept going long. I kept thinking, oh, this has got to be the bottom. Like PayPal went from $300 to $200. That's got to be the bottom. And it wasn't. It just kept going. And every time I would go long, I was losing money. I was holding it too long. Blew up my account in 2021, had to go back to work. And it was difficult because I had to take kind of a low-paying job. I think they started me at $12 an hour. I worked my way up to about $15 an hour, but I had to work overtime. I had to work 6 days a week. I did pick up a new skill. I learned how to drive a forklift at the warehouse, which I'd never done before. But, that shit sucks. And it's hard on your neck. You're like looking up at the pallets. I mean, it sucks. I never want to do that job ever again. If I can, I don't want to jinx myself here, but it really sucked, and having to go back to work at 32 years old, flat broke pretty much, after having some money from the markets and buying metals and buying clothes, and then I lost all my money. it was very, very, very hard, you know, but I didn't give up. And I eventually got back into it. I was investing, you know, in metals or in stocks while I was working. But I eventually got back into trading, and that was in like June or August of this year. By September, because I was in the hole, right? I was $3,500 down on the year. By September, not only was I out of the hole for the year, but I was up about $1,000. And then by the end of October, you know, I was just doing so well, and I really felt like in the zone, and lost all my motivation to be at the warehouse. So, you know, that went down. I left, and for the last, you know, since October, so November, now we're in December. I mean, I cannot believe how quickly my fortunes have turned around. I literally can't believe it. You know, some days it feels unreal. Other days it feels like a gift from God. Some days it feels like I'm doing it all on my own. Other days it feels like, you know, God is just carrying me through these trades. But to think that my fortune has changed so quickly, and that it could go in the exact opposite direction again if I'm not careful, I really enjoy that. You know, I enjoy the risk. I enjoy the you know, the bet. You know, putting my whole life on this. You know, most people don't think like this. I don't. I mean, most people I know don't think like this. They don't think, oh, I could just stop working and trade the stock market and put, you know, $1,000 on the line for every trade. Most people don't think like this at all. I don't know anybody that thinks like this. You know, even the other stock traders that you know, I know a futures trader and a broker. I mean, they're still working. You know, but I have this dream that I can trade stocks, and then with my free time, I can give it freely to things I care about. Right? This is why I want to trade stock, so that I don't have to spend time at the, you know, 60 hours a week working at a warehouse. If I could trade, make my money, make good income, you know, then I can spend all the time in the world volunteering at church, helping out, you know, other Greeks that I know with their businesses. You know, I work for a guy, I cater for a guy you know, sporadically, because, you know, I am a good worker if I care about it, right? If I'm not completely burnt out, and, you know, I'm helping out the community. I get to spend time with members from my community, and I'm paid very well for the catering gig, right? So that's a plus too. But that's because I'm a part of this community, you know what I mean? And so they look out for me, and it's a blessing from God. But, you know, to think that, like, if you are going to trade and you're going to be successful, all right, you're going to have a lot of free time. I mean, that's just, if you're trading and you're doing it right. You know, if you're looking at the markets all day and trying to catch every move, you're probably going to lose all your money. But, you know, if you're doing it right and you're being consistent, you're going to have a lot of free time. And you got to fill that space with something. So I would rather freely give my time to the church or to companies or organizations that I care about, you know, or spending time on my social media, you know, building my social media platforms, building my base of viewers. I don't like the term follower. I really don't. I mean, you know, it's just, I don't like it, because I don't want anybody to just blindly follow anything I say or do. So I want to put that out there. This is getting long-winded, and we have a little bit more to talk about. We're at, what, 18 minutes? This might be like a 30-minute long video, but it's Sunday. This is the Sunday review. I'm trying to give you guys an idea of where I'm at mentally, spiritually, and financially. And I think it's all related. You know, part of my spiritual awakening, if I hadn't had a spiritual awakening, I don't think I would have had a financial awakening. So that's the last thing I'll say about that. All right. So what do we have coming up this week? Well, obviously, in the week ahead, we've got the interest rate decision. We have CPI report. If the CPI, and I think that comes in, I want to say a day, I think that comes in Thursday, and the interest rate hikes are coming in on Wednesday. I think that's how it is. CPI report. Yeah, you also have monetary policy meetings all over the world, so we'll have to pay attention to the UK, maybe the euro. So yeah, the CPI is actually set to rise a little bit month over month. It's set to rise by 0.3%. So we need to see if the CPI comes in above that expectation or below that expectation. And also the core CPI is going to be important too, because the Fed likes to not count food and energy because they are more volatile. So the core CPI, which I think is like housing and consumable products and stuff like that, if that comes in really, really high, it's not going to be good news at all, because it means that we need more interest rate hikes, or at least according to the Fed and their monetary theory, we're going to need more interest rate hikes. Who knows if it's actually going to work? It might not work. Inflation could be so entrenched that we're dealing with this for 2-3 years. I want everybody to realize this. There is no Fed pivot. The Fed is not going to pivot. We're not in a place. Just look at the PPI that came out last week. It's over 7%. I think it's 7.4% year over year. Right? Inflation is entrenched. And they spent so much time telling us that inflation was transitory. Well, now, you got the mainstream media telling us that, the Fed's going to pivot. The Fed's not going to pivot. And the Fed will, trying to understand the Fed is like literally reading tea leaves or tarot cards or something. It's a lot of nonsense. It is. It's a lot of nonsense. But the clues that the Fed gives us, and Jerome Powell gave us a very good clue about the average inflation rate, because this is another thing that people, I think, are really misunderstanding. And I do want to credit the uneducated economists for putting me down this rabbit hole, putting me onto this rabbit hole. 2% inflation target. That's not the target. Right? There's no way they can keep 2% year over year. And I think they realized that. They used to say that. They used to be their message was a 2% target. But now Jerome Powell talks about 2% over time. And there is an article somewhere that explains that they're going for a 2% average. And they changed this recently, I think this year. So a 2% average would mean that if we were below the 2% for so many years, right? Because the Fed kept talking about, we need to get inflation up to 2%. Remember, we were below that just a couple years ago. Well, now we're way above it. And what Jerome Powell said last week was that the 2% target over time, he was asked about this, what's the metric you're using, or how much time are we talking about here? What Jerome Powell said was at least a 5-year economic cycle. At least a 5-year economic cycle. And he's sort of using 2025. So by 2024, 2025, maybe they'll know if they're near their 2% average inflation target, but maybe not. We don't know. The Fed could change too. The Fed could say, this is more of a 10-year economic cycle, a 20-year economic cycle. Who knows how far back they're looking? I think a lot of the elite, and when we talk about the elite, you know who I'm talking about. Government officials, the families in government, the families that have been in government for many decades now, the families that have been in the Fed, this is who we're talking about. They want us to believe that they're completely in control, but we know from history that things can get out of control very, very quickly. The dollar is another really hot topic. In fact, I have this article right here from Axios. All right, the title is "The Greenback Slump Could Signal Good News for the Economy," and they're basically saying that after hitting a 20-year high, the dollar is now weakening fast. No. Look at this chart. Look at the dollar index chart. The dollar does not look weak at all. A little bit of a pullback, but it's not even 50%. The retraction is not even 50. We're at 104.88 about, give or take, as of recently. I think the high was 110 or something. We haven't even pulled back from the main rip that we got a couple of months ago. We haven't even pulled back 50%. We've pulled back maybe 25, 30%. Right? The pullback. So, you can imagine this in your head, right? Stock goes up. If it pulls back only 30%, it doesn't pull back anymore. Well, that's a good indication that the stock is ready to run again. Well, same thing with the dollar. Same thing with any of these charts. This is how it works. And then you take into consideration that the International Monetary Fund this week, and all the banks are talking about this, that there is between 65 trillion, I'm hearing 80 trillion as well, of dollar-denominated debt globally, right? Because you think about all the pension funds, the governments, the banks that want to buy assets, American assets, but to do that, they have to transfer their currencies to dollars. So then when they settle, it gets settled in dollars, and when I don't exactly understand. I'll be honest with you. I don't completely understand it. But what I do understand is that there's trillions of dollars of dollar-denominated debt. So when that debt is called to be repaid for, right? When that debt needs to be repaid, it makes logical sense that there's going to be a strong demand for dollars. And what will that do? That will probably increase the value of the dollar, meaning the dollar will buy more, especially compared to other currencies. So this could be optimistic news, right? Because if the dollar continues to surge, it's going to crush, especially the emerging markets, but even Europe. And Europe has that war going on. It's going to crush them, all right? With the prices and, compared to the U.S. dollar. But it's going to be good for Americans. And Jamie Dimon, he considers this when he talked to MSNBC. Remember when he talked about crypto tokens being pet rocks? Well, earlier in that interview, he talked about his concern for the emerging markets with this dollar surge. So all of this nonsense about the dollar collapsing or the dollar continuing to go down, I don't buy it. I'm holding my cash, right? I've got cash. I've got cash in the bank. I've got cash in my trading account. And I believe this cash is going to buy more next year than it did today. I mean, as far as the assets go, whether you're talking about stocks, crypto, metals, bonds, all of it, your dollars buy more today than it did this time last year. So if we're in this economic cycle that's probably not going to end anytime soon, the dollar's going up. The dollar's going to surge, okay? I'm not the only one that's talking about this. But this is my most recent philosophy from just reading what I'm reading and thinking about this logically, So those are the main things here. You had consumer sentiment unexpectedly jumping. I don't really know how I feel about these sentiment indexes or fear indexes. I think a lot of it kind of is a little meaningless. I care more about the actual economic numbers, not just sentiment. But the sentiment seems to be that, still that the Fed's going to pivot, that we still might get a Santa Claus rally, that the low is in for the year. I don't believe any of that. I think it's quite possible that the low is not in for the year, but time will only tell. We have a lot of big things happening next week. So focus on the inflation, the CPI report, focus on the Fed interest rate hike. And if you're going to position yourself overnight or whatever, think about what you think the Fed might do, put a position on. Don't bet the whole farm. But there is this one trader. I watched a documentary about him. What was his name? He's a commodities. No, it was Larry Fink. It was Larry Fink from BlackRock. I watched this documentary about him. He says he's the kind of guy, or I think it was Larry Fink. It might not be Larry Fink, but anyways, one of these guys, one of these bankers, traders, they said they like to put all their money in the basket and then watch the basket very carefully. I'll have to find that quote because that was hilarious. And that is more my style, right? I do kind of like to bet the farm, so to speak, and then watch it extremely carefully. And if I don't like it, I'll get out. And if I'm up just a little bit, I'll get out. That's kind of my style of trading. Eventually, guys, when I want to get a new Mac. For whatever reason, I can't get this OBS connected to my screen. Whatever version I downloaded of OBS, the newer version, with this particular Mac and the software, I can't get the screen on my video, right? Share the screen. But eventually, I'm going to get a new setup. I'm already thinking about treating myself for Christmas. Because it's like I'm investing in myself. A bigger computer, maybe some monitors and stuff. It'll help me make more money. But eventually, when I do share these screens, I'm going to go over these trades with you guys. I'm going to show you I might even try to screen record some of them. I want to, this is content I'm thinking about for next year. But I want to, break it down a little bit more because it's hard to talk about it and articulate everything without actually looking at the chart. But I'm really enjoying the overnight inflation trades. I'm really enjoying the, which I've only made a couple of those now, but I think I might try it this week. Because I'm expecting inflation to come in hot, and I'm expecting the Fed to raise interest rates probably by 75 basis points. But people are telling me 50 basis points. It's hard to know what to believe. It really is hard to know what to believe because the mainstream media, I think, is purposefully, for whatever reason, trying to deceive us with the Fed pivot, with the dollar's demise, with all of this nonsense, buying the dip. Larry Fink says or I think it was BlackRock, says that buying the dip is not going to work anymore. Right now, we're in a new monetary and financial regime. All right, that is the entire point of me making these videos, is to articulate that, express that, understand that, bring it to my viewers. It's a different financial regime that we have never lived in before, right? I mean, I've never lived in an environment where interest rates were going higher. I've never lived in an environment where inflation was this entrenched. I never lived in an environment where, volatility, not just in the stock market and crypto, but in prices of everything, the volatility is just crazy. So it's very, very exciting. All right. But we are at over 30 minutes. So I'm going to wrap it up here. Thank you so much for watching the video. Please do follow me on Instagram at Millennial Trades. And as always, until next time, God bless. I'll see you on the next video.